Hi, Jeff Romanski here from SecurePlan Insurance Solutions. I'm in my home today to have a quick demonstration about the importance of an income stream. And this is something that I find that every single financial advisor or insurance broker should be talking to you about, and they probably aren't. So let me demonstrate what I mean by this. If I turn the tap on my sink, you see the water flowing out. If you think about the tap as you and your ability to earn income, when you're working, there's an income stream. When you're not working, the income stops. So when you're working, what happens? You're feeding the drain. You're feeding your expenses. These expenses can be things like your home, your car, your entertainment, your vacations, your children's education, your clothing. Pretty much everything you have is likely dependent on your ability to earn an income. So while you're working, you have an income stream coming in, and hopefully you're taking about 10% of the income stream from day one, and you're putting that into a retirement savings plan. And this retirement savings plan is going to fill a bucket or a container up. And eventually, when you're closer to retirement, you're going to have enough money in this container that you can turn the tap off and stop working. And now you can depend on this bucket of money to live off of during retirement years. But what happens if midway through your life, this income stream stops unexpectedly? Let's say there's a disability, like an injury or illness, that prevented you from ever working again. What are you going to do? So now you're midway through life, you have some money in this container for retirement savings, and you have no more income coming in because the tap is broken. You're no longer able to go to work. So ultimately what you need to do is you need to tap into these savings. You can't just go to the bank and say, hey bank, I can no longer work. Can I just not pay for my mortgage payment? The bank's going to say, sorry, you got to pay up or we're going to take your house away from you. You can't just walk into a grocery store, take the food off the shelves, put it in your cart, and walk to your car without paying for it. That's considered stealing. So really what's going to have to happen is you need to dip into retirement savings early, and that's never a good recommendation. And now your retirement savings is literally being used to pay your expenses. You're pouring your retirement savings down the drain, literally. So what I try to do with my clients and what I do myself is I have another little container. And this little container represents an income protection policy. This is a disability insurance policy, which you should really have a discussion with your financial advisor because it is so important. So think of this. You have an income coming in. You have, money going down the drain for your expenses. You have some money going into your investment savings. And you also have between 1 to 3% of your paycheck going into this other container, which is called your disability insurance policy. Now, what happens is your little bit of money goes into a much bigger pot of money that everybody else is paying into who buys into this type of plan. Now, let me be clear. When you buy disability insurance and you're protecting your income, I don't actually ever want you to use it. I want you to waste your money. I never want you to get sick. I never want you to become disabled. I want you to live a nice, healthy life. But unfortunately, there will be some that aren't so lucky. And if you think about it, your wasted dollars, if you are so fortunate you never get sick, will go towards somebody who is in need. And if you were the one who becomes sick, other people's wasted dollars will help fill this bigger bucket of money that is going to continue to feed your expenses. It's going to provide you an income stream. And not only is it going to provide you an income stream while you're working, it's going to continue to put money into your savings for you. So this way, when you turn 65 years old, your disability insurance policy stops, but now you still have a nice big bucket of money that you can live off of during retirement years.